Welcome to the Money and Investing Show. This space is all about managing money and kickstarting you into the world of investing and finance. A series of bite-sized episodes designed to simplify and equip you with the tools on how to get you started, along with some tips and tricks for those already investing. Stay tuned for today's episode with your host, Dale.
Hi everyone, and welcome back to another episode of the Money and Investing Show. I hope that you're enjoying the content so far. However, if there is something that you would like me to discuss or feel that I haven't gone into depth on a certain topic, please feel free to send me an email at info@capitalmediagrp.com. That's info@capitalmediagrp.com. So last week we talked through how to buy a stock or a share from your broker, and maybe some of you have already gone out and made that trade. And for others, you might be wondering, all right, cool, I've got my broker all set up and I understand now how to execute an order, but how do I actually pick a company to invest in, and where do I find that information that I need to make that decision? And I mean, armed with literally tens of thousands of companies from all around the world, where do you start looking? There's just so many choices. And luckily, the internet has made this whole process a lot easier with just so much information at your fingertips. So first up, you want to determine your goals for investing. We've covered this a little bit in episode 4 when we spoke about different investment styles. However, do you want that stock that you're going to pick to be an income-producing asset, one that pays out regular dividends? These are generally more mature, profitable companies with lower capital growth. Think your banks, your Telstras, your miners. While listening to the episode on risk, if you determined you have a low tolerance to risk, you might look at a wealth preservation strategy and invest mainly in stable blue-chip companies. Or you might be looking for growth companies that have a higher degree of risk but offer larger potential upsides. As always, you can always look to do a little bit of each to really help diversify your portfolio. So once you have your goals sorted, I like to think that reading is one of the best ways to discover new companies or new trends. Reading from plenty of different sources will really help provide you with so much information that will help form the basis for your ideas and thesis. Business sections of newspapers are a really great place to start. They'll give you some broader industry and political type trends, as well as some company-specific articles. However, most of them tend to be geared towards the larger cap companies within Australia anyway. I really like the AFR. I get a digital subscription that's pretty cheap, and it's provided me with some really great insights over the years for the cost of what I spend on getting that subscription. After newspapers, there's always things like investing websites, and there's so many available that I'm not going to name them all, but one I really like is Livewire Markets. They have a really good selection of industry experts that contribute to all different types of articles. And I found that a really useful tool, especially when trying to research some companies and get some different insights and perspectives. There's then also the online forums and social medias. So think of things like Twitter and Reddit. They're also great sources for trends and stock ideas. I know you don't necessarily, that's not the first place you think you'll look for business news, but there's some really smart, sort of intelligent people posting some really thought-provoking and insightful information on those forums. Now, think of each of these sources as a way to really narrow down companies or industries that you might like to look into further. Next up is really about just keeping your eyes open. It sounds pretty silly, but there is opportunities and ideas everywhere you can look. And I mean everywhere. So you look around the home, there'll be ideas, or when you're out in public, there'll be plenty of different things happening that you could potentially invest in. So as an example, let's say I am out shopping and I notice in one of the shops that I go to a different payment terminal. I then go into a second shop and I notice the same terminal. So I might think of that and then go home and do some research on payment terminals. And I might find that the one I'm seeing everywhere belongs to Square, the payment company in the US, or it could be, Tyro, who's an Australian EFTPOS provider. I can then go and dig a little deeper into this company by reading their company reports. I might look at customer reviews or check them out on my broker. If your broker provides that kind of detail, you can do that. So I'll really start to build a case for something based on just what I'm seeing out and about if it's everywhere. So once you've found a company you like, the first thing I do is head to the company's investor center of their website to really read up on that company. Now, when I talk about going to a company's website, make sure that you're on the investor section and not just the company's homepage. So companies will have sort of two different pages for their websites. One's their customer-facing website that's all about what they do for customers, and one's an investor portal that's really about what they deliver for investors and reasons why you would invest in their companies. So while most homepages might be useful to see what the company does, it's really geared towards their customers. So you really want to make sure you go to that investing page. There'll generally be a link to it. Sometimes it's really big and plastered in one of the corners that you can click on. Other times you just find it down the bottom in the sort of contact us sections. These investor portals of the company's website are a great way to get a feel for the company too. So things like their performance, their balance sheets, and their overall numbers are in here. Their strategies, their goals for the future, or anything else notable on the horizon can all be found within these investment centers. Depending on your broker, you can generally find a lot of this information also when you search the company's ticker within your broker. I will generally then back this up with a quick search on Google Finance, or Yahoo Finance is very similar. This will bring up a company's chart, some fundamental metrics along with any relevant news stories on the company you are searching for. So I find this really useful to get a feel for what's happening with that company in the news. The thing I really like when using Google Finance is that it also recommends similar companies. So you can use this in two really great ways. One is you can check out the company's competition and who they're competing with for revenue. So you can get a really broad sense in a competition. And two, if you're still at the industry view of your search, it will give you some additional companies to go and explore. Myself personally, I like to take what I call a sales funnel approach to how I pick my companies or start my search. I work a day job in sales, so this approach looks really similar to the way I look at a sales pipeline. Picture a big funnel split into three sections. So when I think about a top-down approach, it's really about, recognizing a couple of industries first. So the top part of that funnel is industries. So I will do a little reading on those industries, look at the, overall market size, the companies that are competing in that industry, the customers that are there, the growth potential for that industry, and then I might pick an industry that I think has some potential. My next stage of the funnel, I would move down and find the companies that sit within that industry. So I won't just pick ones that are potentially directly that industry. I might also look for other companies that might impact that industry when I'm doing that research. And so I might narrow that down to one or two companies that really match what I'm looking for and match my goals at this point. And so then I can really start to conduct some further in-depth analysis on those companies. So essentially, I start really broad and then funnel my way down. For instance, I might like the idea of the payment platforms that I was talking about earlier. Maybe I've read a few articles about this industry and I think that it will be an area for growth. So while conducting my research, I might find all the big banks are competitors in this space. I might find the two companies I spoke about earlier. So I think I mentioned Square and Tyro. Maybe I see things like American Express, Visa, MasterCard. So from there, I might find a couple that really match my overall goal. And so I can then narrow it down to one or two that I want to go and investigate further and conduct more research onto. You can also conduct this analysis in reverse and go bottom up. So you might already know the company you like, so you can really then work your way back up that funnel and start to study their competitors and the industry in which they sit. You might have maybe 3 or 4 companies you do this for and find the one that you like best as you do that analysis. So if I'm going bottom up, how do I get an idea for the stock in the first place? There's a couple of ways there that these might come about. First up could be my shopping example. I'm seeing this company everywhere when I'm out in public, so I add it to my analysis list on my watch list. Then there are websites that have things called stock screeners, and stock screeners are essentially a giant filter or search that you can filter that will give you a stock based on whatever parameters you want to set. And these can be as broad or as narrow as you like. Broadly, I can just say I'm looking for, certain stocks within an industry and a market. So as an example, you might go technology and the ASX, and I would get all the tech companies that sit within the ASX come up. Or on the other side, I can go really niche and specific and add lots of different filters. So, I could say I want to find all the robotics companies in South America that have a market cap between 50 to 500 million that are growing above 20% per annum. So as you can see, you can really be very specific with these stock screeners. I generally find with stock screeners, though, that they're for people that are a little bit more experienced and really know what they're looking for and are really hunting for a specific piece of information with a company they're looking for. Next up, you might have heard or read about a company recommended by a finance professional. It could be on an investing website or a financial channel, could even be a podcast. This is a great way to get some ideas around companies as well as learn some of the things professional investors are looking at when they make their decisions. However, you really need to remember that this can be a trap for young players, as you need to remember that their goals may be vastly different to your own. These people writing the articles or talking may have gotten into that stock at a much lower entry point, or they may have a reason for trying to pump up the stock or to talk the stock down. So, always take this information with a grain of salt and conduct your own research following. And while there is definitely no prizes for originality in investing, if someone has a great idea, there's just no shame in following them into that trade. Just make sure that you've done your own research as well and believe that it's a winning trade for you and it matches your goals, as you'll have no one to blame but yourself if the investment goes south. I know one of the best trades I made came from watching a presentation from an investor on what used to be Sky News, and it was about NextDC, a data center provider. So some of what he was saying in the conversation really stuck with me. So I went away and did some of my own research and decided that it was a really good recommendation. It matched a lot of my goals and what I was looking for in a company. So I bought and I still hold NextDC to this day. Lastly, the other one to be really careful of is just listening to a mate or co-worker tell you that they got into a trade that, made heaps of money for them and you just blindly follow. There's always that one mate or co-worker that's talking up all their money they're making or the next big thing, but you always need to remember that their goals and risk tolerance may be very different to yours, and they may be getting into the stock for entirely different reasons than you would. Or they may just be blindly copying another mate of what's been told to them and they're just repeating it to you. So really important to do some research. You might have seen a lot of this with people on Reddit lately in the news. So one of the subreddits, Wall Street Bets, had people just blindly following the crowd into GME trades. And some of these people lost really large sums of money. So the lesson is, while it's easy to get caught up in the FOMO of watching everyone make money, always do your own homework, because at the end of the day, it's your money that's on the line. As I said, there is definitely merit in listening to other people's ideas and opinions. In fact, these ideas and opinions will make you a better investor just by listening to them or reading them. You just need to remember to take them with a grain of salt and always conduct your own research. So, in summary, read plenty, keep your eyes open, and you will find opportunities everywhere you look. And if all of this that we've talked about in this episode sounds like too much work, you can always just park your money in an ETF. I think it was John Vogel who once said, "Don't look for a needle in the haystack, just buy the haystack," referring to ETFs and the ability to not need to put too much emphasis on getting just one bet right, where you can just track an index and not need to worry too much about it. So when it comes to top down or bottom up searching for ideas, give both a go and find out which one suits you better. I tend to go top down when I want to work with a theme that I think is really going to take off, or bottom up when I've heard a recommendation that I want to do some more analysis on. So that's all for today. And as always, if you liked what you've heard, please hit that subscribe button or leave me a review. And as I said at the top, if you've got any questions that you would like answered, you can shoot me an email at info@capitalmediagrp.com. Hopefully, following this episode, you can start to research some industries and companies yourself, and hopefully I've made this process a little bit easier for where to start and where to look. Thanks, guys, and have a great week.
Please remember, the information and opinions provided in this podcast is general advice only and does not constitute financial advice. This podcast was created without knowing individuals' needs, financial situations, or investment objectives. The host of this show may hold positions in the companies discussed. Please remember, before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.